afternoon, everybody. My name is Andrea Reynolds, and I'm CEO and founder of swoopfunding.com. Thank you for joining me here at the Tees Valley Summit. For this session, we're going to be talking about what the current economic outlook, what's going on in the world, what does that mean for you as a business owner, and what can you do in the face of such uncertainties at the moment to ensure that your business not only survives but thrives and is able to recover. So just to quickly give you a bit of background on Swoop itself, a little background on myself also. I began my career as a chartered accountant with KPMG and worked with many businesses from small, medium, large, and mainly in the area of raising finance for businesses, looking at their business planning and identifying how they could scale those businesses. Fast forward a few years and I decided that with technology changing, that I would be able to turn this offering into a technology platform where businesses, regardless of what size, could find out what funding they could be matched to, and also find out where they could make cost savings and do this digitally. So swoopfunding.com was launched in May 2018. And so what we do is we look at everything from every form of finance. So what loans are you eligible for as a business? What grants are you eligible for? Are there investors out there who you could be matched to? And then also looking at what areas are you being overcharged for basic services like banking, utilities, insurance, broadband, and where can we find those savings for you to improve your bottom line? And so that was the premise behind Swoop and why I'm here talking to you today. So if I just briefly maybe show you a quick map, if we can turn to the next slide, on what does the funding landscape look like for you, even today, even in these times? You know, probably you think I can go to my bank and I can ask them for some funding. And this slide really is to really encourage you to know that there are multiple sources of finance out there that might be right for your business. Even if you're a startup, even if you're a business that has been trading for less than 2 years and you don't have much of a credit history. What's happened is since 2008, from the previous crisis, we have had a change in the entire small and medium business finance market as a whole. And so we have a number of lenders in the market that are not related to banks. And these lenders are being financed by investors who may know your sector and may be interested in niche lending products. And so we have everything from, if you're in e-commerce, for example, and you spend a lot on Google Analytics, we have lenders who specifically lend to e-commerce sites based on their Google Analytics. We have everything from startup loans, from your first working capital facility, right through to you want to acquire a business because you've identified an opportunity in this current uncertain climate. So everything from lending, grants, how do you navigate the grant landscape? Everything from looking at what's going on in your region right now to what's occurring in terms of if you're looking at something innovative, trying to have a breakthrough technology, where do you find the finance for that? And then lastly, the area of investment. The UK market has a thriving investment market, but you might not know how to actually connect with those investors. You may be wondering what type of information you have to get for them. So again, this is the type of work that Swoop does. You can get everything from your business plan templates with us, right through to being matched to these funders, right through to us managing those applications through to success for you. So this map in front of you is quite busy, and it's just to let you know that there are other options out there over and above perhaps being frustrated with your high street bank. We will talk about the COVID schemes, the government schemes that are out there a little bit later in this session. The next slide I wanted to show you is in relation to savings. And so many businesses don't realize where they can make savings across their services. And so at a time when we are all trying to eke out the most from our cash flow, the most from our cash reserves, now is the time to look at these cost bases that you have. And people don't realize, because how can you compare another bank with the bank that you're currently with? How do you know what you could be getting on your energy bill, for example? We're very good at doing these things as consumers and for our own personal lives, when exactly the same offerings exist for our businesses. So I would encourage you, on Swoop, what we do is we analyze your data, and then what we're able to do is call all of the providers, this is through technology, get different rates and comparisons from them, and return the best results to you. So typically, this slide is showing you the types of savings that we're unearthing for our customers right now. And in some cases, it's really gone towards them starting to build up their cash reserves for when they have to start paying out maybe their bounce back loan in 2021. Maybe it's that they're trying to actually eke out another month's cash flow so that they can survive. And perhaps you're trying to deal with the fact that you're coming off furlough at the end of this month. So finding these savings before you have to look at cutting your proposition or cutting your employees is key. So that's what we do at swoopfunding.com. And these are the types of ways that we can help you. But for now, I wanted to focus this session on what should you as a business owner be thinking about? How can you help protect yourself during the two huge events that we are going through right now in our business lives? So if we turn to the next slide, I just briefly wanted to touch upon Brexit first, and then we can move into COVID. In terms of Brexit, a lot of business owners still, even though we have the end of the transition period at the end of this year, a lot of businesses still have not thought about how is Brexit going to impact them. So if you haven't, don't feel bad. You're in the majority, not the minority, but you still have time to get yourself prepared. So the first thing I would recommend that you do, regardless of whether you think you're going to be impacted or not, go to .gov.uk/transition. And there you can fill out a brief form that describes your business, what your activities are, types of employees you have, and you will get a diagnostic on the areas that you will have to think about and prepare for when the Brexit transition period ends. And I tell you, I did the survey myself, and I thought we were pretty well sheltered from the impacts of Brexit. But out comes the detail of the legislation changes that are coming. And it's in the detail that then you understand, actually, I am slightly impacted. So that's the first thing I would do. Don't be overwhelmed if you see a long list. Just take it as it comes and look at the priorities that may exist. It's even down to the detail of when you travel next year if you are a business that's looking to export. So I would say that is the first absolute must do on your to-do list post this session. Other areas that you might need to consider that you may not have. You could look at areas like your employees. Are there any that need to get a right to work and a right to stay here? New employees that you're going to take on, how do you deal with that? And in some cases, unfortunately, in some sectors, you are going to have a lot of form filling to do, particularly import-export businesses, logistics, etc. Those are the ones that will have quite a few forms to fill out. The next thing I would suggest that you do is, in order to understand your Brexit impact on your business, it's not just about what happens to your business directly. It may impact your supply chain. It may impact your customers. So the next thing I would encourage you to do is actually have the conversation with both your customers and your suppliers and say, hey guys, have you worked out your Brexit plan? Do you even know what's coming down the track for yourselves? Because that might impact us as well, and direct them to .gov.uk transition so that they can do their own diagnostic as well. So even if you're looking well sheltered, they may be well sheltered, your customers may not be well sheltered. There may then be other sort of byproduct impacts from Brexit. And so it can be things like people start paying later. There might be a slowdown in deliveries. There might be a slowdown in receiving components to finish something to then get it out the door. All the while, cash flow is being impacted. If there's a day added on to your working capital cycle at any time, your cash flow is going to be impacted. So there's a couple of things I would encourage you to do. One is, we'll get to COVID in a moment, but if you're looking at what can you do to really best ensure, regardless of what might happen, how can you safeguard yourself? Look at your cash reserves. And so this is where you say to yourself, is there a way for me to build some cash reserves right now in relation to what the unforeseen is coming down the track? It may be positive, by the way. There are going to be positive effects and negative effects of Brexit. We all know this for a long time. But if there's any crisis occurring in the economy, this is when banks get nervous. And so they retreat on their lending and they try to shore up their balance sheet. So this is what I'm saying. If you're eligible for something now, before the unknown comes in 2021, build your contingencies now before we move into the what does this look like, everyone's a bit uncertain, etc. That's when things will really start to retreat in the market. And you're probably saying to yourself, well, that all sounds fantastic. How the heck am I supposed to build cash reserves while we're in the middle of a pandemic and potentially further lockdowns? Some of you might be in tier 2, tier 3 right now. What does that look like for me? So if we move on to the next slide, I wanted to talk about COVID, not just the impact side of it, but also the uncertainty element, and things that you can be doing. And if you haven't done, then you should look to do them, because we're coming up to quite a few deadlines. So the first thing I would say is, if you are unfortunately in one of those regions where there are additional lockdowns, there are other funds that are now available. Now we can have the debate over whether there's sufficient funds or not, but what is there, I will tell you about. Every local authority where there is a higher tier lockdown will have additional funds for businesses within those areas. Now, it'll be based on the business rates, the rateable value of business rates of a property. And it'll also be based on whether you're a small business. So there's two areas. One is on business rates, and the other is what's known as the discretionary fund that the local authorities have had. Now, you've probably been through this before at the beginning of lockdown, and actually just pre-lockdown, there was a budget, and the government had announced these small business rate relief type grants for businesses in any case. The latest one is that for a property where the rateable value is 51,000 or more, you will receive £1,500 every 3 weeks. As I said, your rateable value may be less than that. You may be a small business, and therefore you would fall into the discretionary fund bracket, where it's averaging between £500 and £1,000 rather than £1,500 coming through for small businesses. Now, the debate is obviously raging at the moment in terms of £500 is every 3 weeks is not going to help a business survive. But it's just to let you know that that's what's available at the moment. It is all purely based on your local authority. So if you have been through this with your other grants, return back to your local authority and see what's available, because it will vary from authority to authority. That's it on the sort of the specific local lockdown. If we then think about the other government schemes that are out there, first of all, you are probably at the point of you're now winding down on the furlough scheme. If you are self-employed and you went for the first grant in July, being self-employed, another key date for you is October 19th. and that's the date where the second grant that you could apply for, that's the deadline date on that. So the second grant was based on 80%. So what you work out is your average monthly profits, and then it's 80% of your average monthly profits for 3 months, up to a cap of £6,570. So if you are self-employed, you haven't looked at that second grant, you've got 4 days left. Take a look at that. It's absolutely invaluable to you. You must have been trading 2018 to 2019 and submitted your self-assessment by April 2020. You must have traded in 2019, 2020, and you are intending to continue trading. So that's the scheme if you are self-employed. If you are a limited business, then what you're looking at are, what are the other government schemes over and above what I've had? You may not have gone near the bounce back loan. You may not have gone and considered the CBILS scheme, but I would urge you, if you are now looking at how you're going to survive through the early stages of 2021, whether it's Brexit or whether it's COVID, this could be a potential good stopgap solution for you. Let me unfold that a bit further for you. So on Bounce Back and CBILS, the schemes were extended. The deadline was originally for Bounce Back 4th of November. It's been extended to the end of November. CBILS, the deadline was originally the 30th of September. It's now been extended to the end of November. If you think about Bounce Back, first of all, you're looking at a scheme where you can take out a loan based on your turnover. So it'll be 25% of your turnover. For your first year, you're paying no interest on it, and you have a capital repayment holiday. The government also recently just extended the repayment period. Originally, it was 6 years. Now it's 10 years. So what they're trying to do is alleviate the impact of when you have to start repaying after your first 12 months of the loan. The interest rate period is free for the first 12 months. After 12 months for Bounce Back, it is 2.5%. So this is becoming something that's affordable, even if you're looking at how am I going to recover and get my trading back up? Hopefully those numbers that I've just mentioned to you make it an affordable facility for you. Now, we see trends on our platform, and we can already see we have customers that are taking CBILS and Bounce Back, and they're actually putting it in a deposit account, and they're earning interest on it in that deposit account right now, and they're keeping it as their cash reserve because they don't know what this quarter and next quarter and the quarter after that is going to look like for them. So what they're doing is creating that contingency now. They haven't had the need to use it to put out fires. Some have, but they're looking at how they can use that to help them get back to normal trading. So that's Bounce Back. CBILS are for businesses that who are looking for over £50,000 in lending, and the first 250,000 there's no personal guarantee required. Same with the Bounce Back, no personal guarantee required. After that, if you want 350,000, you have to give a personal guarantee for 20% of the excess. So if you're going for 350,000, then your personal guarantee would be on 20,000, 100 over the 250. Again, very good interest rates. Again, you may have gone for a CBILS loan with your high street bank, and you've struggled and you haven't heard from them, or they've said no. Do not be despondent. There are hundreds of other lenders out there, as you saw from the map earlier. We have a large number of accredited lenders under the scheme. And again, you may have looked at it at the beginning of lockdown and realized that you weren't eligible. As the scheme has gone on and the government has received feedback and seen how the scheme is working, they've actually changed a number of the eligibility criteria rules, which widens the number of businesses that can now apply. So if it was something you looked at, thought it wasn't for you, it could be now. Again, you get your interest-free period for your first 12 months. And in both cases, whether you want to pay your Bounce Back or your CBILS, you want to pay them off early, there's no early repayment charge. So again, certain businesses are kind of putting some aside, putting it into a deposit account, and then using it as they have a bit of a cash crunch happening at the moment, or perhaps they need to reinvest. What some of the trends we're seeing is a lot of people pivoting to online, so having to invest in, an e-commerce site, the ability to have payment processing. Some are changing their business model altogether. So that's what they're using those types of funds for. Even if you have a bounce back or a similar scheme, government loan scheme, you can then look at what are the other products out there once my revenues start to generate again. So your revenues might start generating, but your working capital might be suffering from a cash crunch because you've had to invest it elsewhere during the pandemic. And so that's where there are other alternative products, like I mentioned, like the e-commerce one, like if you have credit card terminals and you're receiving payments on that, there's loan facilities based on a percentage of your revenues coming through, so you only pay it as a percentage of the revenues you receive coming in. So lots of variety and alternatives out there that I would say have a look at. I suppose I'll also tell you about some of the trends we're seeing. And so because Swoop, we have over 30,000 businesses on our platform, and we're helping those businesses, matching them to the different products. What we can see are changes in demand. And so I would say we have seen, from our perspective, our community, we can see businesses going from complete and utter no trading to emerging and now trading again, or have pivoted and are now making sales through online that they never had before. So there are some positive signs that we are genuinely seeing. And initially we thought, oh, we're matching these businesses to the government loan schemes because people desperately need the cash, to then see that actually in a number of cases they're using it as a contingency. So it's really quite positive trends that we're seeing in some instances. As I say, the key dates for us now are how are businesses going to cope with furlough, and with the furlough scheme ending, how are they going to cope with Q1 of 2021? And what we're trying to do is help businesses try and see a path forward of surviving and hopefully trading to the end of 2021. Our data is showing us if we can get as many businesses as possible to the end of 2021, Q4 2021, we will be over the worst of it. Mainly because there is hope that there will be some vaccine coming in early 2021, but that's going to take time to roll out. But even the sentiment, the economic sentiment, will shift once we're over the peak of the crisis. We will have gone through our first quarter of post-Brexit. And so I suppose the key message I would say is just think to yourself, do a cash flow forecast. Again, we have templates we can give you, but cash flow forecasting is central to your business now more than ever. It's a tool we should all be using all the time, but if there was ever a time to use it, sit down and do your cash flow forecast and say, can I get to Q4 2021 at a minimum, and then looking to recovery in 2022. To end this session before we move into Q&A, I would say we've looked at the data from the previous recessions. There is a massive difference in this recession. It's not a credit crunch. SMEs, small and medium businesses, are not suffering from a credit crunch. What we're suffering from is a liquidity crunch, and we're suffering from not being able to serve our customers during lockdown. So the Bank of England, even the International Monetary Fund, etc., they're all saying that they expect a stronger rebound coming once we come out of this period. And so what we saw in 2008 was absolutely, we had the terrible years between sort of 2008 and 2011. But then we started to see a resurgence and huge growth. So for those businesses that are struggling, know that you're not alone. Please come and register with us, and we'll try and help you. For those who are thriving, because there are businesses who've actually grown exponentially during this period, you might be suffering from cash flow issues yourself. Usually you are, because you're expanding your trading, so I would just encourage you to keep going, and hopefully we can help you along the way, whether it's reducing your costs, or finding some finance for you. I would say, if there's any questions, anything at all anyone would like to ask on the live Q&A, I would be delighted to take those questions now. Thank you.
Hi, Andrea. It's just Caroline here. Thank you so much for presenting. We don't seem to have any questions as yet. Attendees, if you can hear me, just please use the live Q&A function, which is just on the bottom of the little kind of grey toolbar there, and I'll be able to pick them up and ask Andrea for you.
Great.
I'll just give it a couple of more minutes.
Fantastic.
What I will do, Andrea, is I will put one of the slides on, because I thought that was really useful, just in terms of, where are we? That kind of map. I thought that was really useful to come back to.
Yes, absolutely. There might be products on there that, and actually funding sources that people have never seen before, and particularly in investment. And so I would say, for those who are looking to raise investment, it may be your first time. If your business is 2 years or younger from the date of your first commercial sale, then you are entitled to apply for a tax relief status, which is known as SEIS, that's Seed Enterprise Investment Scheme. And so you can raise your first £150,000 under that scheme, and it makes you a very attractive business if that's how you raise your funding. Because for investors, if you are a UK resident and you invest in a UK company that has that tax status, what it means for the investor is they can put in £100,000, and then they get a deduction from their personal income tax bill of 50% of their investment up to £100,000. So they can get £50,000 off their tax bill.
Mm-hmm.
And so there's other tax reliefs around that. So a lot of businesses that are raising investment don't know about this scheme. It's absolutely fantastic. And so if you are looking at raising investment, that is the first place to start in getting your house in order before you go speak to investors. And then the EIS one is for larger businesses, so 7 years or younger from the date of your first commercial sale. And so, yeah, investment is another way. If you don't want to go down the debt route, or you already have a loan, and you're thinking, oh, I don't want to raise more lending, this is a good way of looking at maybe getting more finance, more long-term finance into your business to help you grow.
That's great. Well, we don't seem to have any questions there. I think that's a lot of information for people to digest and really get that kind of planning. Obviously, it's great to think of, let's get through to that Q4 2021. Can we survive and grow in 2022? So that's really useful. So thank you so much for your time today, Andrea, and thank you for presenting. I hope people have had a good chance to digest the information. Like I say, these presentations will be made available to you all after this session, so we'll get that through to you in due course. So thank you so much, everyone, for your time. We'll leave it there.
Thank you.
Enjoy the rest of your day. No, thank you so much. We'll speak to you all soon.
Okay, bye-bye.
Have a great day, everyone. Bye.